Hi, I'm David Scranton, and thank you for clicking this video. Today, we're talking about investing for income, and we're sharing tips on how you could determine if it makes sense for you. And I want to bring in today's guest, David Wright, founder of Wright Financial Group, a retirement income store in Toledo, Ohio. David has over 30 years of experience helping people plan and save for retirement. Dave, as usual, it's great to have you here.
Thanks for having me back, Dave.
Now, you're in the saddle every day talking to people about investing for income, clients and prospective clients. So tell us, what are some of the most common misconceptions that you find people have about investing for income?
That's a great question. Many people that come here or that I talk to on the phone don't even understand what investing for income is. And once I describe it to them, their immediate reaction is that there's more risk involved with it. And once they understand that it involves a specialty and not necessarily the way they've been investing to get to this point before retirement, they understand that actually it checks off a lot of the boxes that they need checked off for reliability, purposefulness of their investment, and they understand that they really need to work with a specialist, to get the right things in their portfolio that can actually protect their principal, protect their shares from being eliminated, too early in their retirement. We want to just live off the income. We don't want to touch the principal.
So you say purposeful. So obviously people retire with certain purposes in mind, certain goals. What are some of the most common goals that you hear people tell you they'd like to accomplish? Maybe people who are, let's say, within 10 years of retirement.
The most common goal is that they want to have a seamless move from their working career to their retirement. Many people just, they don't want to complicate matters. If they've traveled a little bit, they'd like to continue to travel. If they've doted on the grandkids, they'd like to maybe do that a little bit more. They want to, enhance those experiences, and they don't want to have to worry about their income and having the predictability of an income stream from their investments. So they have to understand there's two disciplines. One is building the pot, right? That's, what we call the accumulation phase. We want to not be so worried about the stock market. It's going to go up, it's going to go down, but we accumulate shares over time. But once we get within 5 to 10 years, we know we need to adopt a different strategy.
So it's interesting because all the things that you mentioned are things that require income, but sometimes people also want to retire and make a pretty significant lump sum purchase. How often do you find that being a major goal of folks approaching retirement?
Not so often. The biggest thing that I'm seeing now is people wanting to downsize or maybe right size with, real estate markets the way they are. They're looking at maybe, selling their house at a premium now and finding that new house or a new build. But by and large, if people have a goal like that, maybe it's, to buy a boat, buy a yacht, or, buy that cottage by the lake, that requires a little bit different approach to our investing process. We segregate those things for lump sum purchases, big goals like that, from the money they need for income, the money they need to have from IRA, mostly their qualified accounts. We want to segregate those from the money they want to use for a major goal like, a major purchase, because IRAs, 401ks, 457s, 403bs, they make lousy lump sum deals. They just do. You have the tax element, you got the government wanting their share of the tax. So we can invest a little differently in the piles of money that we have for major purchases and, lump sum toys, so to speak. But I don't find that very often. Most people have already tackled purchasing those items prior to even considering retirement, Dave.
Yeah, tend to be downsizing. That's what I find too. But so if you do have a lump sum purchase, then you might be more apt to still want some growth in your portfolio, not just income.
Right.
But there's another reason people want growth too. They want growth because they've been programmed during all those accumulation years you mentioned that that's what they should be getting. But what they fail to realize oftentimes is you can get growth. You can engineer growth even with an income strategy, right?
That's correct. It drives me absolutely batty because everybody that comes, I'll just be honest with you, it drives me nuts because there's mutual funds, and we've coined the phrase here, mutual funds have become kind of the disease of ease. We went from a pension type of society to a 401k world. Mutual funds became the go-to instrument, but you don't get much in the way of income from a mutual fund. You get plenty of growth, but you don't get the predictability of income. But I make sure that everybody I talk to today, Dave, understands that I'm not Debbie Downer. I'm not an ostrich. I don't put my head in the sand. I understand that the stock market has continued to build, but if you're in retirement or within 5 to 10 years of it, you need to start changing your approach from one of, all mutual fund investing, which is more of the G, in our equation, sure. PR equals I plus G. We want to focus on things that produce income that can be a part of G. I'm not anti-stock market. I'm just pro-income. And I understand that there's ways to select high dividend stocks, for example, that are well vetted, that can provide that 3 to 5% dividend yield along with growth when growth can be made, because there's still a lot of cash out there, in people's hands that has to be spent. So we understand that there needs to be that paradigm shift from the mutual fund world to maybe more individual securities that are in the market that can provide income. Have both. Why not have both when you have that choice? You just need to make sure you're working with someone that knows how to pick those things that are going to have some staying power and give you the income you need, plus growth, as long as we can get the growth. Because I'm sure you agree, markets have become so frenetic. We don't know whether before now and the end of the year, they're going to go down 50%. Or up 67%. We just don't have any feel for fundamentals.
Yeah, no, of course not. You never do. And anybody who says they can predict the market, especially in the short term, is obviously wrong. So is that a big part of how you help people reduce their stress level as they get near retirement, which is perhaps one of the scariest transitions that any investor can make, going from giving up that paycheck to going into retirement?
It is. That's why I love the income message, because you can check off the box of growth. If they want some growth, they can have it. We can certainly segment that part of the portfolio for growth and take advantage of that. But, I don't know about you. When I turn on the news at night, I'm, within 5 minutes, my blood pressure is starting to go up. Well, it's true. The last thing that people want to have is stress with their portfolio. People fear running out of money before running out of life. That's their number one fear. So if we can do one thing and one thing well, that's to produce a reliable stream of income that they purchase from investments that are well selected, that, are monitored. It's no longer buy and hold that I believe is the proper phrase for advisors, because advisors have gotten lazy. Just like I think do-it-yourself people that do their own investing. Not to insult our viewers, but people have gotten a little bit lazy. It's not buy and hold. It's now, in my opinion, buy and adjust. You want to adjust your portfolio as conditions change in our political world, economic world. It's making those trade-offs and changes in the way you invest today and how you're going to invest first of next year. But it's removing that stress of how am I going to be able to use my portfolio for income without selling shares and cannibalizing my portfolio. Yep. It's simple, but not easy, but you have to work with a specialist who knows what they're doing.
Yeah, you do. Somebody like yourself. Absolutely, David. And, it's great. So lots of reasons today why investing for income is the right solution for most people, retired or approaching retirement. David, thanks so much for your time. Time flies when you're having fun, and I think we had fun just now. Thank you.
I enjoyed it. Thanks, Dave.
And thank you for watching. If you enjoyed our interview, click the thumbs up button to give us a like, and make sure you subscribe to our YouTube channel for more interviews with financial advisors from across the country.